Market conditions remaining mildly bearish, right on the edge of ticking down to that bearish move. We had a pretty nasty sell-off yesterday overall, seeing our rank sitting at 27.06. That's starting to come back down now a little bit. If you can see that line, it's a little bit hard to see here, but this line is starting to curl back down with some of this price activity that we're seeing. So definitely some weakness in this overall trend, sitting at the upper end of the range, which we've been talking about now for several months. We saw momentum move back sharply, hovering right on the edge of that bearish trend. On a couple of indices are in that bearish trend, particularly technology. We'll take a look at that chart here in just a minute. And then also the breadth indicator, which is also weakening. Sentiment indicator also starting to curl back down, showing some weakness. Had one of the biggest days yesterday on the fear indicator, which we will take a look at. Buy-sell ratio, I've got a little data issue sitting right here, but one other way to look at that is if you look at the indexes and go to, the sectors tab, and look at the sector scan right here at the top, this 2.21. You can see that the number of buys, 2,300, number of sells. So we still have a positive buy-sell ratio really across the board. We've been in such a strong uptrend. This, as of right now, for the most part in most sectors, is just a pullback, just a retracement. If we look at S&P 500, slicing through that 236 area, pulling back to around that 540 range, and this area of support now has really got to hold up. There's a little gap fill potential right here, or 533 is that next stop, which has got some significant support right there. If you look at this chart though on a 1-year time frame, it's a little less intimidating. This kind of helps us put in perspective where we're at in some of these retracements, and so it's still relatively healthy in terms of just a pullback, and we potentially could retrace all the way back to this 529 range. That could put us back into downtrend or a sell territory on S&P 500. We're already seeing that in technology. We saw NASDAQ really falling here in this 1-year time frame. Let's look to see where we're sitting there. We're sitting right at this 465 range on NASDAQ. Pretty significant support range coming up. If we do continue to slide through that 465 range, NASDAQ could take a nasty trip back to 441 right here. And so we'll watch to see if we get any kind of a bounce or support. We've got major resistance now happening at the high of that bar. And so technology is going to struggle here in the shorter term. But we're also now oversold on momentum, which means we could see an area, at least of a shorter-term bounce, if we don't see real acceleration to the downside right here. In terms of sector, well, actually, let's look at bonds right here. We've seen something interesting here in bonds where we've got the long-term bond, which is continuing to retrace, meaning those longer-term bond yields are hovering or moving higher, where the short-term yields are actually still holding up and moving higher. In terms of the bonds, and that's what we want to see ultimately is shorter-term bonds moving higher. That means those rates are coming lower on the short term, and that long-term also would like to see it come back down, but not as aggressively as we'd like to see this shorter-term bond move lower. We also saw the Russell 2000, which has been leading this move, have a little bit of a consolidation right here, a couple of percent, not quite as bad as technology. Sectors, we also saw a bit of a shift here in sectors, moving back into kind of that confusion mode where we've got some in buy, some in hold, some in sell, but we had a large number of those moving back into that hold range, and we're seeing the strength in healthcare, utilities, financials, real estate, which are safety and interest rate sensitive type of plays. We're also seeing consumer goods had a big nice day up yesterday. I mean, relatively speaking to this ETF, up, at least it was up yesterday. Okay, commodities we're seeing are moving. Gold right here, a little bit of a gap higher in a retracement, but a little bit of a move back up as we saw some weakness in equities as well. It didn't hold that move. Silver also showing some weakness as well. Some support sitting right here at this $26 level to keep an eye on silver. And then USO, which is oil, also hovering and potentially working on some shorter term support, maybe a bounce right here at these levels. The $78 level on USO has a lot of support from some of this price activity over here. If we take a look at the muscle stocks group, we're seeing, we're always seeing new names that are coming in here. Today we're seeing some medical biotech names, NUVB, having probably one of the better looking patterns where it's entering back up into that momentum zone, which is this above this 236. Good solid confirmation bar, increasing volume right there. We also did see a couple of tech names moving. We saw Seagate, which is a big data storage company, really on earnings had a big gap higher. It also faded with the market, but interesting. Keep an eye on STX there as well. That'll do it for today's update. Everyone have a fantastic day today.